All right, so this is the first video for this channel. I'm a S&P 500 futures trader, so I'm going to be focusing on the E-mini during the week. Hopefully going to do daily outlook videos just before the market opens to recap what's been driving the market and to highlight levels and catalysts that are coming out in the upcoming trading session. Hopefully we'll be doing weekly reviews at a bit of a higher level, possibly for individual equities and other indices. But for now, we're just going to start with the S&P. So let's go to a daily chart here. So recently, this right here, this is the low from January 31st, and the subsequent days are the trading that we've seen so far in February. So I'm going to zoom in a little bit here. The market's been rallying on a combination of hopes that China has the coronavirus contained, and combined with that, the market has seen Powell making statements that are seen by the market as being accommodative, essentially saying that they'll use whatever kind of weapons that they have to continue this 11-year expansion, even though interest rates are quite low. So that suggests that they would move forward with some form of quantitative easing, even though they are already making purchases in the repo market that they don't deem to be quantitative easing, and that's set to end in April. But I think the market is expecting that to perhaps be extended in the case that the coronavirus and the supply chain interruptions that we may see as a result of that could impact the U.S. economy. So I guess the bottom line between this most recent move here is the hope that the Chinese government is both accurately reporting deaths and cases of the coronavirus, and that they will be able to successfully contain the spread of the coronavirus. So that optimism has been pushing us to all-time highs. We also had a pretty solid earnings season, and on top of all that, Powell does seem to be willing to use further quantitative easing to support the markets. So that's the fundamental backdrop. Now, dropping down to an hourly chart here, let me zoom out. This was yesterday's trade, and this was fueled by the fact that it appeared as though the coronavirus new cases were slowing down. Reuters reported, though, that the most recent update for today, the pace at which new cases were being identified picked up quite a bit. This may be due to the fact that they're using CT scans to identify the infections, and that's a faster way to diagnose this. So the market might look at that positively, might look at it negatively, but if we drop down to a more granular chart, this is a 5-minute. This vertical line here, that's the close. So after the close, we sold off pretty strongly. We have recovered quite a bit. So yeah, that's what we're looking at. In terms of economic events, we had CPI below expectations. Core CPI remains steady. That's not the Fed's preferred inflation measure, but one of the reasons that the Federal Reserve is keeping rates low is they aren't seeing inflation picking up to where they would like. The market would like that because the market's going to want low interest rates. Looks like tomorrow it's the next significant event. We've got core retail sales to see how strong the American consumer is. It's not likely, I don't think, that we've really seen any impact from the coronavirus yet. Kudlow says that it's not going to have any material impact, but we recently found out that the incubation period could be more than 3 weeks. So it's a little early to say exactly the impacts of that. So I'm going to go to an hourly, and I'm going to put in levels. And the way that I'm going to put in levels is by looking at the most recent time price was at that level. I'm going to ignore levels that have been just chopped up. Now, levels that have been freshly broken and that just got tested, those are still valid. So I'm going to pop those in. Starting with these all-time highs here. Most recent low. Last time we were down there, we did respect that. We weren't able to close below that level, so I'll put one in there. This level is freshly broken, has not been tested. You can see this one retested right there. This one is not as good. We didn't break it very cleanly, but it still should be noted. So I'm going to make that. All right, so these are the most recent levels of support and resistance. They're just the nearby levels. I'm going to drop down to a 5-minute chart. Okay, so the market has been rallying from this level of support down here around 33.50. Looks like these highs are up around 33.82, and these aren't exact prices, these are just zones. So it looks like we've got multiple levels of support beneath us. If we do have any breaks, I would expect, if we broke up, I would expect us to test this level. Looks like there's a decent level of supply at this 33.80-ish zone. So if we do have any breaks, if we break upwards, this is going to be the next place the market is going to test, the 33.80 level. Now, getting past that would be breaking to all-time highs, would probably require some sort of catalyst. One potential catalyst is that betting markets have, as of yesterday, had around 58% chance that Trump is going to win the election. That's just a probability at that point in time. Anything that occurs that could push that percent up would likely be a potential catalyst. Other catalysts that are not scheduled could be tweets or any kind of developments on regarding the coronavirus. So if we take a look again at the upcoming events, as far as today goes, I mean, not a whole lot. So we'll be waiting for retail sales tomorrow. So that pretty much just leaves the unscheduled event risk. So for shorts, there's quite a bit of support beneath us. I'd be kind of careful. If we end up in the middle of this range and get a break downwards, I would probably look to scale out a portion there. And if you look below, I mean, there's quite a bit of support below. It would be nice to get a runner to the upside because there's not a whole lot to stop us. But the targets on the downside should be around a 33.50 level, just ahead of the 33.40 level and ahead of the 33.30 level. So few levels, and without any big catalysts, it's hard to say what direction the market's going to go. Honestly, I'm pretty surprised that we've bounced off the lows this far. Looks like they took out stops below the lows from a couple days ago. And yeah, we'll just see where it goes from there.